Well, OPEC has agreed to cut production and boost oil prices, sparking calls to build more pipelines and increase production in America. Here's One America's Kristian Rouz.
International oil group OPEC recommends yet another reduction in crude output by member countries to support prices. During a preliminary meeting in Vienna Wednesday, OPEC and Russia agreed to production cuts, albeit no decision has yet been reached on the volumes of such reductions.
Did you recommend a cut?
The cut, yes, but we haven't discussed the number. Is
there a number?
Not yet. Work in progress.
OPEC members have been concerned with the recent plunge in oil prices, which had dipped by as much as 30% in mid-November from this year's highs, despite a new round of US sanctions against Iran. OPEC's main meeting is slated for Thursday, and member nations are eyeing an output reduction by as much as 1.3 million barrels per day. But a Reuters report citing anonymous sources claimed Russia is opposed to a major cut to production.
Whatever the number that we might come up with under this mutual agreement, we decided to monitor the situation on the market and react to it quickly.
Russian officials reportedly said they could reduce output by no more than 140,000 barrels per day. But Middle Eastern oil monarchies want Moscow to cut twice that volume. Higher oil price would boost fiscal revenues in most OPEC countries, but not in Russia, where production volumes are equally as important as the price. Meanwhile, a reduction in OPEC output would have an inevitable effect on the American energy market as well.
The United States generally would like a lower price of oil. They'd like to see lower gasoline prices because that's important for votes.
Gas prices are expected to rise at the pump, but a more expensive oil would also support an influx of investment in US production. This comes as some energy investors say oil is dirt cheap to produce in Texas and North Dakota, as well as in the Canadian province of Alberta. But a lack of pipeline infrastructure is hindering the shipments of North American crude to US refineries and overseas customers.
I think we're going to see further improvement as oil by rail ramps up over the next couple of quarters. But really, I mean, let's be clear, this is a problem that has been created by a lack of pipeline takeaway. And so what is really going to solve this problem is getting those pipelines built. There's nothing more urgent that I can see for our country in terms of economic stimulus than to get those pipelines built.
For his part, President Trump is expected to take action in response to OPEC's efforts to boost prices, as he has previously promised to keep US fuel prices low. In this light, the Trump administration is set to pressure lawmakers on Capitol Hill to increase budget spending on infrastructure, including oil pipelines. Kristian Rouz, One America News.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube, and call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.